Good afternoon, everyone. Now, normally, um, the Women's Resource Center has a couple words before we get started, but maybe you all have already covered that. And so, if so, I'll dive right in.
Yeah, since we're a few minutes late, I think we should just dive right in.
Perfect. And so today we are actually going to be covering one of my favorite topics, and it really is about leveraging credit and understanding what credit is, how to use it, and how to improve it. Because what happens with credit is it actually just gives you an opportunity to leverage and utilize and build wealth more strategically. But it also sets you up, and as we go, as I will discuss in the presentation, it also just life situations that you actually need to have credit for. And so, with that being said, let's keep moving right along. And so, because we're starting a little bit late today because of some technical difficulties. If you've been here before, you already know how it goes. We're going to spend about 45 to 50 minutes with informative information, and then I'm going to leave at the end a few minutes open for some Q&A, especially when it comes to credit. Credit can be a little bit intimidating, especially if you haven't used it before, or if you've been in the space where you've used it and realized it wasn't as responsive used as responsibly as we would like. Sometimes it can make you nervous or scared to look into it further. But I don't want this to be a nervous situation. It really is just about being informed, and so you can make empowered decisions. And so I just want to promise that this information today will basically help you understand the power of having good credit, and then also how you can improve your credit usage. And so when you walk away today, hopefully you've learned something more that can actually help you just continue to leverage credit for the good of all. I'm Alex. I'm a native of Sarasota. I'm also a financial empowerment coach, CPA, certified financial planner, and a licensed life insurance agent. But I'm super passionate about helping women in particular really build wealth by being strategic. And so I will say just a personal story is I got my first credit card when I was 19 years old as a freshman in college, and it had a $1,500 limit, an American Express Blue card. And I promptly ran up that credit limit so quickly. And so my first lesson in utilizing credit was I didn't know what I was doing, and no one told me. And they let this 19-year-old kid run up a card, and no one told me anything. And so I have basically learned everything that I know about credit from Hard Knock Life. And so throughout this presentation, we'll make sure that I'm sharing some of my tidbits, and you may be able to relate or remember your first credit card, and truly not even understanding, well, how do I qualify for this credit card? Where did it come from? How did I get it? Because quite frankly, no one talked about this in high school, or if they did, I don't recall. I do remember balancing a checkbook. I do remember a class that talked about that, but no one ever really talked to me or my friends about what credit was. It was just like you saw people swiping cards growing up. My grandmother always used credit cards. And so I just thought you use credit cards, and as long as you paid your minimum balance, life was good. That is actually not true. And so, with that being said, are you all ready to jump right in? Are there any questions in particular that you currently have, or that you have clients who've had questions? And I want to make sure that I address any of those. Well, perfect. Let's go right into it. So there is a workbook that's included that'll be in the replay if you're catching the replay, and then if you're live, there is a workbook, and so you'll have the opportunity to write down notes. But the first part that I want to talk about is just understanding what is credit, and basically, credit is simply the ability to borrow money and pay back later, whether it's money or resources. You've done something where they typically look at your credit profile, and they said, based on your activity on your credit profile, we deem that you are trustworthy and responsible enough to borrow money right now to pay for whatever, and then in the future repay that money back. Why it's so important is it's not just about credit cards. That's like That's great because you can leverage other people's money to purchase items when you need them. But some job applications actually look at your credit report. And why they do that is they basically say, are you being responsible? So if they feel like if you are not responsible paying your bills on time, if you are not keeping up with your payments where you're not going over the credit limit, sometimes your employer are looking at that and saying, this may not be a trustworthy individual. And that it could not be further from the truth. We all have paths we may not understand, right? But in addition to that, getting utilities look at your credit score. Some schools may look at your credit score when you get older and of age. So things like that we may not always keep top of mind, that your credit score is actually going to impact. Because basically your credit score makes you look better on paper. It increases the strength of your application. And so it's really important that we don't just think about credit in the respect of getting credit cards. When you're ready to purchase your home, it comes into play at that point. But just real life situations, credit is definitely having a pretty important impact. And so if you think about it, like why is it important? Just think of this: options, options, options. It increases your options. And we love, especially as we are wanting to have power over our finances, options is going to be your best friend. In cases where you are having an emergency and you need access to funds and you don't actually have the cash, having good credit, having whether it's a credit limit on a credit card or a line of credit on your home, it gives you access to more options. And so that's why it's super important to understand, what does credit give me access to, and then how can that impact me in my day-to-day life. And then lastly, and this is where we're going to take a bit of a deeper dive in, like, what is required to actually utilize credit? Because we're definitely going to take a deeper dive into your credit score and all that good stuff. But what else is required? Because I mentioned earlier about oftentimes, we are not educated on how to properly use credit. And so sometimes we may be afraid that we've made mistakes. And so that's why it's important, in addition to understanding the credit score, what items do you need internally? What habits should you be accustomed to or working towards to make sure that when you are building your credit and you are utilizing credit, that it's for your well-being and not going to actually cause any further detriment to your situation. And so we'll take a deeper dive in there on our next slide here. And so next, we want to basically understand what's needed to utilize. And so if you've been in any of the previous workshops, you'll see that I talk often about mindset. And mindset is basically, what are your thoughts and beliefs? What are those internal beliefs that are going on? Sometimes they're conscious and you're aware of it, but oftentimes it's subconscious. It's thoughts and beliefs that we have that we haven't even really brought to our consciousness to understand that it's happening. And so what that may look like is, if you have a belief that if I use a credit card, I'm irresponsible, you may find that you never open a credit card, you never apply for loans, you never do any of that because you feel like that makes you irresponsible. And that's just not true. Using the credit card irresponsibly, yes. But just having a credit card, that does not mean that you're irresponsible or not. Using a credit card to pay for expenses, to create experiences for yourself, that does not necessarily mean that you are an irresponsible person. But when you have that type of mindset, that may actually prevent you from applying for a credit card or actually using it to build your credit. So just keeping a positive mindset is super important. And so you want to sit back and think about, what may be some habits or beliefs that are actually impacting your credit in a negative way. So if growing up in a household, your family use credit cards often, like in my family, we use credit cards, but you found that maybe you were seeing late notices or There was or maybe you saw your parent use their credit card and it was declined because it was over the balance. These are situations that have happened in your life when you were younger that now have impacted the way you are seeing the world, and that may impact how you actually interact with your credit. If you're someone who perhaps growing up, your mother or your parents didn't have credit, and so they were forced to always pay for cash with everything, or perhaps they were never able to be approved for mortgage or loans or things like that. That may impact you to feel like, okay, you can't do that now. And so you want to just think about what are some things that have maybe happened in your past that are now showing up in the present that's actually impacting how you use credit cards. Do you find that you run up your credit card bill and now you can only pay the minimum balance? That might be something that's actually happening because of some of your mindset beliefs. So just thinking about what are some things that are happening that you would recommend, or think about, I need to explore this a little further. Like Rome was not built in a day. It's really just about becoming aware and then taking the steps that we need to actually debunk some of those mindset and negative beliefs. You also, in order to really utilize credit responsibly, you have to have discipline. And so that means, and you have in your workbook, you have a budget worksheet. That means looking at what money is coming in, what money is going out, and being really disciplined when you swipe the card, making sure that you're identifying, do you have a way to pay this back? Is what you're swiping your card for, or what you're utilizing your credit for, is it important? One thing I will say is, especially when you've worked on your credit, or you may have good credit right now, and people come along and they say, oh, would you mind co-signing for me? It may actually take your discipline to say no, and it is okay. I was working with a client, and she, was gracious enough to co-sign for a family member to get a vehicle. Unfortunately, the car was wrecked, and there was still a loan outstanding. Fast forward, there's now a repossession on her credit report for co-signing. This is not a vehicle that she was able to enjoy. This is nothing for her. But now she has been impacted by this individual. So just being mindful that credit can create options for you, and it's okay to be disciplined. And sometimes you have to say no to yourself, but sometimes you have to say no to others, and understand that that is okay. So just being mindful of really being disciplined in your use and what you're saying yes to as you are utilizing credit. And you definitely want to make sure you have a sound budget or cash flow management system, because when you use credit, keep in mind, you're just borrowing. You have to pay this back. And so you want to make sure that you have a spending plan in place to make sure that you are being able to actually pay everything back timely, because you don't want to negatively impact your credit score, but you also don't want to overextend yourself to where now you're causing additional stress and angst on yourself. Now, well, actually, it'll be the end of this month, we will be talking about debt management and repaying debt, but utilizing credit is not about how much you can borrow from someone and spend. You want to make sure that you are budgeting and properly paying everything back. And then lastly, you want to make sure that you have a strategy. Do you understand the purpose and reason behind utilizing your credit? As I shared, I had my first credit card, $1,500 balance in college. I didn't have a purpose behind getting that card. I was just like, oh, you said I could get a credit card? Fixed. Then I found myself just swiping. Because there was no purpose or reason behind really utilizing that credit, I ran it up with items that, quite frankly, I really didn't need. And so understanding when you are applying for credit, or even as you're building your credit, have a greater purpose behind it. So why are you building it? Maybe it's, you know what, I want to have great credit because I want to be able to get in that apartment. I'm ready to move, and I really want to make sure that I can qualify to get into a better apartment. Perhaps it's, now I'm really ready to get my mortgage. Making sure, like, what is your bigger why, and making sure you're utilizing it. And I would say that this can also support you in deciding what you don't want to do, especially if you are in a place where you're now looking to purchase your first home. They'll tell you, Don't utilize your credit to go out and get new lines of credit or new cars and things like that. When you know what you are working towards, that can also support you in deciding what you won't do. And so just making sure that there's a strategy and purpose behind you utilizing your credit. And then this is probably the area where I get the most questions, and that is truly around understanding how to calculate your credit score. And so what I have done is I've included a pie chart so you can. I love a visual, and so you can see that the largest the largest portion of your credit score, the largest factor is actually your payment history. And so a lot of times, and this is where, I hope I'm not going to go on a soapbox, but I'll just say this. They're called credit repair companies. So there are a lot of credit repair companies that I think some people go to because they feel like they need someone to repair their credit. What I would offer to you is understanding how to calculate your credit score. A lot of times you can actually fix your own credit. And it's not really fixing, it's a formula. And so if you're following the rules of the formula, your credit will improve. And so I'll take a deeper dive in that, but just be a little bit careful with the credit repair companies, because if you don't understand what they're doing, they could tell you that they're doing all these things to improve your credit, and maybe it's not true. And so just be mindful of that. And so the largest factor is your payment history. And that basically says, do you make your payments on time? So if you are someone who's not making your payments on time, you're automatically 35% of your score is being taken down because you're not making your payments on time. And the reality is most times the only thing that's really going to help you with that is time. And you can't rush time, you can't change time. And so sometimes it's just a matter of get on a plan to get your bills being paid on time. And then you will see in 6 months to a year that your score will start to improve because your history is now saying, oh, this person does make their payments on time. Now, there are some instances where, and I don't get into this, but you may be able to specifically work with someone and ask questions about, hey, is there any way to have these payments, late payments, removed from the history of my credit report? And that may be something that you can do, things like that. But that's a very specific question, and oftentimes you'll find that maybe not. But you can definitely ask and find out if there are any exceptions, because sometimes there are. You may have had an extenuating circumstance that has caused you to be late, and then it's at least worth the shot of trying. But sometimes it's just a matter of getting on a plan to pay your payments on time. So therefore, your payment history factor is in a good shape. I recommend clients, if you can pay your minimum payment and just have that automatically come out, do that. I was someone who, when I started with my credit cards, I would try and go based on my memory. Oh, okay, my credit cards due this day. I would try and go by memory. Don't do that. What you can do is work with your banks. Oftentimes they have alerts where they can send you a text or an email and say, okay, your payment is due. So that way it's a reminder. But what I started doing, especially for my credit cards, is I would say at least take the minimum payment. If I could not take at least take the minimum, because typically depending on what your minimum payment is, if it was like 25, 30, 40, 60, $100, I would at least have the minimum payment come out. So it was always paid on time. Now I may incur interest, but I would at least get the minimum payment taken. So that may be a hack for you if you find that, gosh, I'm just struggling with paying things on time. Have the minimum automatically drafted out, and just be watchful of that. The next largest factor and that makes it about 30% of your score, is how much do you owe? And so what you may hear is what's called a credit utilization rate. And basically what that does is that looks at what is your overall available credit on a particular loan or credit card or line of credit. So say your line of credit is 10,000. Then they look and see, okay, well, how much do you owe? So what is your outstanding balance? The lower that rate is, the better. So basically, the lower that you owe in comparison to your full credit line, that looks really good. And basically that's an indication that, okay, this person is responsibly using their credit card. They're not taking their full balance and running up their credit card. That to them is an indication that, oh, he or she is responsibly using their credit card. And so a lot of times with that, you want to keep it at least 30% or lower. Once you start getting over that 30% utilization rate, it does start to negatively impact your credit score. The sweet spot is actually about 10%, but if you can keep just your thought of try and keep that under 30%, that's going to be essential for you. And so based on those two categories, that's already 65% of the factor. So if you can pay your bills on time and then also keep your utilization rate low, meaning based on your credit card, you're not running up the full balance. If you can do that, you are golden. Now, and here's another area that trips people up. So I share with you that I have $1,500 available credit on my credit card. That's not a lot of money. And so even if I only have a $500 balance on that $1,500 card, I'm already now at 33% already. And so I'm sharing that with you is because sometimes we have these lower credit card limits because maybe we got it when we were younger, or maybe we don't have great credit, and so they're not giving us a large credit line. If you have a large balance on those cards, even though it's not a lot of money, so like I said, even at $500, I'm already in the red zone on a $1,500 card. And so if you find that you have credit limits or credit cards that have smaller limits, look and see what you're actually charging on those cards, because that could actually be bringing down your score, even though you don't owe a lot of money. So just pay attention to that. And then the ways around that is just continue to work on your credit to increase your credit score. And oftentimes lenders will automatically increase your credit limit without you doing anything. Other options is you can reach out and ask them to increase your limit. So that way your utilization can actually just be increased without you really having done anything. And then also, of course, paying down what you owe, getting that to a lower utilization. And then the next factor is your credit history. They want to know, how long have you held credit card accounts? They love when you have had a long standing history of having credit cards open. And so a great thing to keep in mind about this is sometimes we have credit cards that we don't use anymore, and we think, oh, let's just close it out. Don't do that. Don't do that. Cut it up if you know that this is a card that Target probably gets me in trouble a lot. So that if you know that you have a situation spending money on this particular card, but you've had it since you were 18, so it has so many years of credit history, just cut it up, but don't close it. Or if you can responsibly say, you know what, I'm only going to use this card once a month to pay for this one thing, and then I'll pay it off. You can also do that. But credit history matters. And so the longer you have a line of credit established, that's going to actually increase your credit score. And then the last two are about 10% each, and it's the credit mix. So credit mix basically means what type of credit do you have? And so there are revolving lines of credit. There are mortgages, installment loans. So basically store credit cards, regular credit cards, car loans, mortgages, things like that. So they like to have you have a healthy mix of credit that supports you in increasing your credit score. And then the last is new credit. And so basically that's about increase. Are you applying for a lot of lines of credit? Because that looks risky to the credit industry. And so making sure that you are not constantly applying for new credit cards, especially during the holiday season. This is where they get you. You're doing your holiday shopping. Yes. What happens when you go check out? Would you like to save 20% by applying for this credit card? Tell them no, okay? Because again, we talked about strategy. So part of strategy is also, why are you applying for this credit card? Because if you think about it, if you're applying for this one-time 20%, discount, especially if you're not at a place where you can actually, maybe you're not disciplined enough yet, or maybe you really don't need it. You're taking on an unnecessary piece of debt, and it's now putting an inquiry on your report. That, depending on your other inquiries, that could actually reduce your credit score. So just be mindful, especially when you're applying for new credit. Does it make sense? And you don't need multiple store credit card accounts. Maybe go online and shop for the sales, see if the store has its own coupons or things like that that does not involve you adding an inquiry or a new credit card to your account. And so that's basically the high level of, well, what do they look at when they look at my credit with my credit score? And so, as I mentioned, payment history and what you owe, that makes up the largest, like over 50% of your score. And so even just paying attention to those two areas, I cannot tell you the amount of times that I've been able to help clients increase their credit score simply by being focused on paying down their debt and making payments on time. And then if any questions come up, don't hesitate to raise your hand, come off mute, or put them in the chat. But then we'll keep moving right along. So now what? We've talked about why credit is important. We've talked about, okay, how do I calculate my score and all that good stuff? How do I use it? Now the next, especially if you're at a place where you're like, well, I don't have credit. How do I increase it? So yeah, how to improve it is first we have to become aware of what is your credit score. What is your credit score? And then also, what is a good credit score? Typically, anything above a 670 is good, and credit score can go down as low as 300. And so, if you are in the mid 600s, you are well on your way to good credit. If you are below 670, you will want to do some work. And there are several ways to get your credit score. MyFICO.org is going to be the most comprehensive way to get your credit score. It is not free. You actually have to pay for it. Now, with MyFICO.org, I love them because they actually are going to give you the scores that your bank is looking at when you're actually applying for loans. And the other thing that people don't realize is that you have different credit scores for different lenders. So the credit score that your credit card company looks at when you apply is not the same as when you're applying for a mortgage. So that can be a bit different. And with myfico.org, they actually show you they break it down by the different types of loans that you can apply for. And so I do like that. So it's going to give you the best representation of what your lender would see. But you can also utilize free sources like creditkarma.com. Also, you'll probably notice with your banks, a lot of your banks say, oh, here, we can monitor your credit for you. And they'll actually give you updates on your credit score. But what they're doing is using like a Vantage credit score. So it's not always identical. But it's a great starting point because typically it's within about 20 points. And so if you're at like a 670 on Credit Karma and you're looking to apply for a mortgage or something, if you're looking to apply for a mortgage, I would recommend checking out myfico.org and just paying that for a bit, because then you can get a really clear number. But if you're just trying to get a feel for where you at, Credit Karma is going to be great for you. Oh, let me just hear the question here. Is it better to just keep a credit card with a zero balance, or should you charge a small amount each month and pay it in full? If you're disciplined enough to charge a small amount, and then I like doing that. Is it better? It's not necessarily better or worse, depending on your situation. So if your credit's already good to go and no issues there, it really won't impact you. And I would say maybe keep the zero balance. But if you're actively looking to improve your credit, it can look favorable that you are using it and then paying it off, because basically it's saying, oh, she's responsibly using the credit card. And so you want to make sure that you get your credit score. The first step is awareness. So you need to know what your credit score is. A lot of times we don't know what our credit score is, and we're going by, oh, I feel like my credit is bad, or I feel like my credit is good. And it's like, no, let's actually look and see what it is. So once you get your credit score, now we have to actually identify what's causing your credit score to be lower than you would like. And so this is when you look at the formula and you can start looking at, and actually in part one, I say annualcreditreport.com. You can pull your annual credit report once a year for free. And there are 3 different reporting agencies, and you can actually pull from each reporting agency at least once. The official site is the annualcreditreport.com. They don't give you your credit score though. They will just give you like the activity of what's going on within your credit report for each credit bureau. Now, what's important to then start doing when you're looking and analyzing your credit report is look and see, are they showing signs that you're not paying it on time? So then now you can see, oh, I'm not making my payments on time. That's impacting my credit score. You can then also look at what are your utilization rates. Look at what's your total credit line, and then look at what your balances that you are actually holding, and then do the formula and see what your utilization rate is. Because then once you start actually looking at your report, you may be able to see, oh, okay, this is what's happening. I owe too much on my credit card. I need to pay that down. That will increase my score. Start just looking at your report to identify what's happening in the report that's actually impacting your score. And then the next step, after you've identified, okay, these are some areas where I need to improve, now you just have to take the actions to take the steps. So if you've identified, and I wrote down the ones that have most impacted the clients I usually work with, it's paying the bills on time. Let's set up some systems to where you can get these bills paid on time, at least the minimum balance. I think sometimes, yes, I always encourage, if you're using like a credit card, pay it in full. So the goal is you're only swiping during the month what you can actually afford to pay off. So yes, I'm always going to say pay your credit card in full. Sometimes that's not reality. So you at least want to make your minimum payment to make sure that it's not actually then reporting negatively to the credit card company. And then you also want to make sure that you are reducing your utilization rates. The goal is to remain under 10%, but you want to make sure you definitely stay under 30% so that it's not impacting your credit score. And so that may look like creating a debt repayment plan to get your utilization rates down. It may look like reaching out to a credit card company and seeing if your balance can be increased. It may also look like saying, well, you don't have to say anything. They increase your rate, just increasing your credit score in other areas to where now the credit card companies are saying, you know what, let's give her a boost and increase her credit line. And then one that sometimes is less like on a checklist is really address some of your behaviors and beliefs and habits that are impacting some of the decisions that are causing the credit score to be down. And so if I know for myself, during certain times of the month, I'm a bit more emotional than other times. So I identified that sometimes that's when I splurge on eating food and running up my expenses. And so that is something that I need to personally address and work through. Okay, during this time of the month, these are some of the habits that I have. What mechanisms can I put in place to where during that time of the month, I'm not overspending on my credit card. And so that may look like deciding, you know what, I have $100 this week. That's all that I can use to eat out. And then after that, I'm done. Start thinking about what habits and beliefs, and then creating systems and things like that can support you in navigating it. Let's see here. Does keeping a balance less than 30% help build your credit more than paying in full every month? Keeping a balance help build your credit more than. So that's twofold. Yes, paying your credit card in full every month does support you in increasing your credit score. The thing with the 30%, there are some gurus that say you want to keep a balance at the end of the month. I don't believe that if you can pay it off, because now you have to consider what are your interest rates. because it's like you sometimes with these credit cards, the interest rate that you're paying could be 20-25%. And so if you are able to pay your credit card balance off at the end of the month, and then just making sure you're keeping it below the 30% as if you can't pay it off at the end of the month. You just want to keep the utilization rate low. But if you need more detail, just let me know and I can go with a little bit more depth. What about if your credit limit is too high? Are there any? No, 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 no. You don't. There's never such thing as a credit limit too high. Nope. You don't want to do that because for multiple reasons. I'm just very much about having options and protecting myself. So with that higher credit limit, anything could happen where you may have to swipe your card or something like that. So you want the credit limit there, but also it also allows you to have a higher utilization rate essentially. Like you have access to more available credit before you're into the red zone of being over 30%. And so no, I would never ever call to have it reduced. Now, but if you find that you are someone who you're like, man, I see that available credit and I'm swiping the swiper, I would say in that case, keep the card, but maybe you take that card from you being having access to it. Like that may be a card that you cut up and you don't actually have a physical copy. That's what I tell clients until you get to the point where you can responsibly use it. But then even with that, start addressing what's behind not being able to actually hold the discipline to not swipe. Really get into what's the reason behind that, because I'm all about you have to treat the cause of something, because it's like you can only remove something so much, but what's the cause behind it? Because chances are if it's showing up in that area in your life, it's showing up somewhere else. And so just also then exploring and getting to the root of what's this about? And so these are just some ways of how to start improving your credit score. But mainly is if you know the formula behind what's impacting your credit score, just start taking the steps to improve those areas that are being negatively impacted. And I apologize because what happened is I actually want to take a deeper dive into credit, and which I think I can still do this. So let's do this. So I want to take just a specific moment to actually talk about credit cards, because I feel like that's where most people either have negative experiences around or they have questions about it. And so I have a couple questions, and then also in the workbook, you can have this. So that way you can, in your own time, you can take the steps to go to your annual credit report and see, okay, what's actually showing up on your credit report. Because oftentimes we don't look. And so take a minute to look at your what's on your credit report, and then either download Credit Karma, or like I said, a lot of our banks actually already have it where they say, oh, your credit score is this. Look and see, or even your credit card as well. So look and see where they're saying your credit score is, and then identify what's your target credit score. The goal is 670 or higher. When you have a 670 score or higher, that just sets you up for, typically you're going to be approved for loans. You also will have a better rate. That's the other thing, that having good credit it impacts the rates that you have. And so someone with a 500 credit score, their mortgage may be 8%, where someone with a 670 or higher, they could be looking at a 7 or 6.5%. Having a good credit score just saves you money. It really does. It really can save you a lot of money, because the higher credit score, the lower your interest rates are, because they're basically saying, oh, you're responsible. So you're not as risky. The riskier you are, the higher rates you pay. And so that's how that works. And so with credit cards, sometimes we have these certain myths around using credit cards. And so, if you have a couple minutes, or you can put in the chat, like, what are some of the myths that you've heard about credit cards? I know for me, one of the myths was only pay the minimum balance. Oh my gosh. I'm so thankful that now on your credit card, when you have your credit card, they tell you if you only make the minimum payment, it'll take you until X amount of years. Like it takes you to it tells you what year you'll have it paid off, and then it also shows you the total that you will have paid. And I'm like, I'm so glad they started doing that, because sometimes in our mind we're just like, oh, we'll just make the minimum payment, and you don't fully see how costly that is to only make a minimum payment. And so when you see it in black and white, you're like, okay, wait a minute, no, 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 no. I will figure out a way to pay more than the minimum. So if there's any myth that you have about using credit cards, write it down, because what you want to do is take those things, that these beliefs that you may be swirling around in your head. First of all, you want to put it on paper and get it out there so it's not just in your head. But then this also allows you to start getting curious to find out, is this really true? And if it's not true, what is really the truth? So that way you're not allowing something like that to be negatively impacting you. And so then also, what is one thing you would like to learn about credit cards? So I'm in financial literacy, and I preach responsible use of credit cards. I make probably an extra $2,000 to $3,000 a year, depending on which promotions I have or how much money I spend during the year, because I use my credit card. That's like a new appliance. That's, maybe paying for a child class in college. Maybe that's taking a vacation you haven't taken in a while, because I use my credit card to pay for expenses that I was going to use anyway. I'm not saying go out and just use your credit card just because, but I'm using this for things I was going to buy anyways, and I'm able to make an extra $2,000 to $3,000 a year, and so that really does add up. So I'm very much about being responsible with using your credit card, because it opens you up to so many other opportunities. For me as a business owner and working with other business owners, sometimes the money is definitely on its way, but you need to actually invest in your business. I love a credit card with a 0% APR. I love them because sometimes it does allow you to be your own bank, to where you're able to finance your dream or doing something that you would like to do. But now this allows you to actually pay for it over time. Again, being very responsible with it, but that helps. I do that in November when it's time to buy new appliances. Home Depot, that is a store credit card where for me, that has helped me, especially, my daughter, my oldest daughter was younger. That allowed me to get appliances that I needed, and I was able to pay for that over 18 months. And it was something that I absolutely needed, but I just did not have the cash flow to pay for it at that time. And so I was able to responsibly use it, and you make sure this is paramount. If you do a 0% APR, you have to have it paid off by the time your promo expires. If you don't, the interest can be crazy. And so again, that goes back to being responsible and having a strategy and plan. And that's why I talk about that, because when you have a plan, when you have the strategy, when you have a purpose behind it, you can actually leverage these opportunities with utilizing credit cards to set you up for the future. And then as it relates to the myth, like once you put that myth out there and you've said it, identify if it's false. And if it's false, how can you benefit from actually understanding, well, what's the truth behind this? And so if the myth was you only pay your minimum balance, the truth is no, you don't pay the minimum balance. You want to pay it off at the end of the month. The truth behind that is you save a lot on interest. The interest rate for credit cards can be really, really high. And so you do want to make sure that you're avoiding that when you can. And then the other credit card tracker, I mentioned that I use my credit cards to really leverage the money that I'm paying for anyways. And so this is a helpful worksheet, because you can, track your credit card name. Start looking at what are the benefits. If you have a credit card, being strategic about it means making sure that it's a credit card that works for you. So if you're someone who you travel a lot and you're paying a lot in gas, you may want a credit card that's giving you 5% on gas. If you spend a lot on groceries, you want a credit card that's giving you a lot of cash back on groceries. Be strategic about using your credit cards, and then you can use that to actually track, okay, what are the perks of this? And then sometimes there are special rules or promotion periods So tracking, okay, when do if you're in a 0% APR for 18-month situation, write down that date of when it needs to be paid back. So that way, every month, if you're paying off, if you're, tracking to pay it off within 18 months, you make sure that you're paying whatever that minimum payment is to have it paid off by that date. But you have that date top of mind. The statement date, you always want to do that so that way you're paying your bill on time. And then the utilization rate. I just always want to track that and keep that top of mind so that way making sure that you're staying under the 30%. And I put the number of authorized users allowed because some people actually leverage your credit cards and they now I don't know how legal that is, but they will actually have people sign on as authorized users and they actually charge people to do that, because if you are an authorized user, you can actually increase your credit score by that. So if you have established and you have good credit and you want to support someone else in increasing their credit score, you can leverage authorized users. I know I did that with my daughter. She didn't pay me, so I may have to talk to her about that. But that has helped her increase her credit score. So now she's not entering this world without credit. So sometimes, we aren't fortunate enough to have parents who had that foresight. And so we're starting from ground zero. But if you've worked hard and you've gotten your credit score, it's cool to be able to support your kids get ahead as well. How do you feel about the credit cards that give you benefits? For example, gives you lots of points or perks, so I'm not really seeing the benefits for the yearly fee they charge. Okay, I don't usually do annual fee cards. I just don't. Unless I can truly see the return on it. So sometimes at American Express, it works if you are using, throughout the year to where your perks outweigh your annual fee. But especially with American Express, I've had to downgrade some of my cards with American Express because it didn't make sense. Like I would do the first year when they would waive the annual fee just to see how it worked out. And then I realized, no, I'm not going to benefit by paying the annual fee. So yeah, I don't really like paying for things like that. But there are so many other credit cards that can give you so much more benefits and then not charge you that fee. So yeah, no, I would only do that. Like I said, if what you're purchasing, it really is you're going to be able to actually see a return. And that's basically all we have. So I just say, good credit affords you more options on your journey to being empowered with your finances. And then you understand the power of credit, what you need to utilize your credit. And then now you can know, okay, how do I calculate my credit score, what goes into it, and ways to improve your credit. Now in the workbook, there's a long list of other ways you may be able to improve your credit. I didn't go through all of those today, but there are definitely some tips in the workbook as well, and that will go out with the email, the replay. And let's see if we have any questions. So this is my thought. I would never give a child a debit card. I just would not, because they have access now to your actual funds of your checking account. So I am not a component. No way would I ever give them a debit card. With the credit card, I add my child on as an authorized user, but she does not have access to my credit card either. So I don't get her a physical card. And for me, I think it's more of a security reason, because who knows? They get online and they go to all kinds of websites, and you just never know who they're giving their information to. I mean, of course you're gonna try and have conversations with them to make sure they're protected, but I set them up as authorized users, but I don't give them the card. Now, if your child is someone who's traveling a lot and things like that, and they would need access, a credit card would be great because, again, it's at least secure. My concern with debit cards is if someone gets access to a debit card and spends the money, that's actually your cash out of your account. As opposed to with a credit card, you can file a dispute, but it hasn't actually, it's still like, it's not that it's imaginary, but it's not hard cash. So that's my only hang up with debit cards. Any other questions? Oh, Casey, go right ahead.
So it's funny because you're right in the middle of my thought, which is my son went away to college, and so I did get him a credit card for emergencies and things like that. Because I know there are times that he's someplace that he might need to buy something that he can't afford to put on his debit card. Because when you're at college, you know, college kids and
Mhm.
debit cards are insane because they're all about, you know, using the electronic payment situation, which drives me nuts because then I can't help him. He can't help himself, like track it, although they think they have control over it, but I don't think so. But he uses the credit card for emergencies and things like that. But I do think that at some point you kind of have to help them build their credit, right? So there's a way for them to do it. If they're or if they're an authorized user, does that actually help them develop a better credit score in the long run? Or does that change when they turn 20 or 21? Or how does that work?
Yeah, it does help them. Now, this is assuming you're doing right, because now this is the other thing. If you have them as an authorized user, but
Mhm.
then you, who's the main user of the credit card, you start going over your utilization rate, or you're not paying the bill on time, it could negatively impact them as well. So if you are, you know, using your credit card responsibly, you're staying on the utilization rate, it has a good history, you're paying it on time, it can absolutely help them. And how it helps supports them is, you know, one of the factors is credit history. And so you're basically giving them your credit history. So that
Yeah.
helps them. You're giving them your on-time payment. That helps them. They're seeing that the utilization of that credit card is low. So that's helping them. So they're basically being able to piggyback on your healthy financial decisions. And that's how it helps them. On the flip side, if you are making not so healthy financial decisions with that card, it could negatively impact them as well. So that's just something to keep in mind.
Yeah. Thank you.
You're welcome. Any other questions? Oh, yeah. Oh, you are so welcome. Yes, and apologies for that tech issues, but if you have any other questions, don't hesitate to reach out. But I do believe, like I said, that credit, you know, we have to be responsible with it, but it really sets you up to just so many different opportunities that when you have bad credit or even no credit, you get denied. And I don't think that it's fair, but it is what it is. And so we just have to roll with the cards that we were dealt and make sure that we're capitalizing on everything.
Thank you so much, Alex, for joining us today. Appreciate it. Thanks everybody for
Yeah, you're
joining.
so welcome. See you later this month.
Bye-bye.
Bye.